Good morning, all. I hope you're doing well, and I hope you had a great weekend. So, I'm going to keep these videos a little bit shorter. One thing I've noticed from my YouTube analytics is that when I make shorter videos, the videos tend to get a lot more views. So, tried to with the longer videos, tried to bring more value and as much detail as I could, but it seems people prefer the shorter videos. I don't know whether that's because people on YouTube are looking to use this as a signal service and they're only interested in the entries. If that is the case, if you're only interested in the entries, please don't use this as a signal service. You won't know in the heat of the moment what my entry criteria, or more importantly, my invalidation criteria is. Okay, so I want to stress that first of all, but hopefully this challenges your perspective, my little breakdowns. And I shall keep them a little bit shorter, which helps me because I have a very, very busy schedule at the moment. If that's what people prefer, then that's what I'm going to give you. Okay, so Euro Kiwi, my favorite of the bunch. I believe we've had what they're calling a stock market crash in Japan, which is why we're getting some erratic price action. If you can see the spread in the top left-hand corner, it's moving about quite a bit. So before I place any trades today, I am going to be making sure that the spread is settled and that it's not moving around crazily. Okay, so basically what I'm looking for in Euro Kiwi is we have, if we just zoom out to the weekly, there's a high all the way above there, but it's a long, long way away. So the bit that I'm interested in is this high here. Okay, what's happened? We have this significant high here, which was we near missed to it multiple times. So we have the near miss to the high. We come down, we come back up, we near miss to that high. The start of all of this was there. So that's the stronger magnet. Okay, price comes back up to tap into that high. What we typically know as well, these higher time frame highs, particularly ones that stand out on all time frames, okay, we usually break up. If we're going to move to the downside, we usually break above, catch people on the wrong side of the market, and then move to the downside. So I was already anticipating in that, and you can see perhaps early signs of that here. What's happened, we've broken above, and now what I'm looking for, so we have this expansion into the area. Okay, so we have this expanding structure. These expansions can act as reversals or continuations in the right area. I am aware that we have a lot of volume here. Okay, so potentially this could be an impulse correction continuation to push higher. Okay, to potentially take out that higher time frame high there, or tap into these areas, because that was just a bit of a wick. But even if that was the case, we'd likely have to find our way down to here to retest the back end of that and to give us this sideways consolidation before that was to occur. Okay, so we could potentially capitalize on a move down to there, which is why my arrow is there. Okay, let's just get that off the chart. So you can see we've wicked above. Okay, it looks like we're coming back down, but we have to be careful here, because especially if there's been a lot of fear in the market due to the so-called stock market crash in Japan. Okay, so we've broken above, we've wicked above, and now what I'm looking for, quite simply, is the following. I'm looking for a break back below this area of interest, because I don't want to be involved in something where this is potentially the retest of this to get long. Okay, I want to see a break back below this area of interest. Okay, followed by a continuation. So either a 5-minute continuation or a 15-minute continuation. Each one of these has 6 to 8 corrective candles on its respective time frame. And then I would look to get short on the break of a 5-minute continuation, or within or on the break of a 15-minute continuation as a minimum. And then there's not really, if we just zoom down, there's not really anything standing in the way until that target down there. Okay, so we have a little consolidation there, which was kind of the retest of the back end of that and that. So that would be my first sort of inflection point. And then my target would be down here for the reasons given. And then I'll measure from the range. And what coincidence, that low there is 90% of the range. And that's often where price can pull back deeply, even if it's going to continue in the forecasted direction. So I would set a take profit there for something in the region of 11%, and I would trail my stop loss accordingly. I have an alert set just above this area of interest to see if we break back below it. And if we don't, then I won't be looking to place a trade on this pair or even check it. As I said, I'll be paying close attention to the spread as well. So that is Euro Kiwi. Let's move on. So dollar CAD doing what I was anticipating as well. So dollar CAD, this is slightly lower down because, yes, we are at a standout high, but we have one sat above which we could easily gravitate towards. Okay, so there's nothing wrong with this trade if we get the entry criteria that I'm looking for, but that is a point of interest that this increases the risk ever so slightly. Okay, and I'm also aware of the fact that we have this volume here, okay, which would likely cause price to break out higher because of how much volume has been generated. But just as with dollar CAD, we may, because you can see we've wicked above a standout area of value, we may be able to capitalize on a move down to here, and then where price then potentially retests that to then push higher. So just because there's a lot of volume here doesn't mean to say we can't capitalize on a move. We just have to know what we're looking for. You can see that what I've got marked up as my area of value is visible on all time frames. So what do? We normally break above if we're going to move to the downside, catching people the wrong side of the market. What's happened? We've wicked above, we've broken back down again. Okay, so the same mechanics over and over again. What did we do? We near missed to that area. Price tried to sell off, but the liquidity that was up there was likely dragging price back up. Okay, and we also get this. So we've had this impulse correction continuation to the upside. So if the continuation leg out is of a similar length, we've fulfilled all of that now. And you can see that we're breaking back below the structure, or that's how it appears at this moment in time. So what I'm looking for in this one is I'm looking for the same thing again. I'm looking for either a 5-minute continuation or a 15-minute continuation. When I did this forecast, price was actually below the area of interest, but you can see I've got it marked up below the area of interest. So I'm not going to set an alert because that's probably just going to trigger. I'm just going to monitor this, set a Google Calendar reminder to remind me to check this at what time are we now? I'm just going to check this periodically just to see if we close back below this area of interest in about 3 minutes time or subsequently, and I'll look to get short on the break, and then I'll be able to manage it down to there as a first target for something in the region of 3.3. And then you also have all of these near misses here, near miss to here, near miss to here. Okay, that makes it more likely that if this did form, we would likely gravitate back towards there. And then if you measure this, 90% of the range takes us there. So I would set my take profit there for the reasons explained on Euro Kiwi. And I would trail my stop loss accordingly, and that would give me something in the region of 6.6 to work with. So shorter videos from now on, which helps me out and appears from my YouTube data to help some of you guys out as well. So I'm just going to set an alert there. Let's just set an alert to see if we break back down on the fly. If that doesn't trigger, then I don't need to check this pair. That's what I'm going to be looking for today, folks. Short and sweet. I hope you enjoyed the new style of video. But for now, have a great day, and I'll see you again in the next video. Thanks very much for watching.